This is the Blockchain Show.
Hello everyone, and welcome to episode number 78 of the Blockchain Show. Today we have a very special guest, Christian Kameir, the CEO of Sustany Capital. This is a very informative episode if you're interested in cryptocurrencies and, more importantly, ICOs. We've had plenty of ICO startups on the show, but we've never actually had much discussion about an ICO itself. Mm-hmm. And we've seen in popular media like the show Silicon Valley, you see it on the news now, about ICO. And we nicknamed last year as the year of the ICO, 2017. And 2018, who knows what's going to happen. If anyone, I would guess that you, Christian, would know. Maybe you could give us a brief introduction into venture capitalism and how it is changing into the ICO space.
Yeah, so some of the things that we apply are very traditional VC characteristics, right? We're looking at the existing projects and or existing businesses that want to enter this field in the same way we looked at technical investments before. It means we're looking at the financial situation, the technology, the team, the legal setup, and then we just apply the specifics to this particular space, which are still not very well understood. So we're also trying to provide feedback and education. We started a local blockchain group at the beginning of 2015, and we have 1,500 members now. We typically get together once a month. And so we're trying to bridge the gap between those groups that are building the protocols and those groups that are actually trying to build applications on top of it. Because there's this old saying, or older saying in VC, you don't want to invest into the first social media startup, you want to invest into the last. And so investing overall is obviously all about timing. So part of our job is to identify the timing of this technology. So if you're looking at things like Ethereum, EOS, Hyperledger, all of those protocols are very much still in their infancies. And so they're alpha, beta at best. And then a lot of those applications that are being proposed to be built on top of them are simply not timely for multiple reasons. So either the technology is simply not there, so it doesn't scale. Oftentimes that's a complaint, or the proposed business model would be too expensive. If you look at Ethereum gas cost as one of the prominent examples. And then oftentimes what we'll find is that the application that someone is proposing actually requires a certain level of scale in terms of adoption of the platform. And there's just too few people in the space overall that could participate at this moment in time. There's this overall warped perception that mom and pop are getting into the space right now. But actually, if you look at the real numbers, that's obviously not the case. That's just the media discussion that's being had. But the people that are in this space and that are large allocators, they have been in the space for some time. They are typically technologists. So they were some of the early miners, some of the early allocators, and oftentimes what happened is they reallocated, redistributed their existing holdings, diversified into some altcoins, and supported those projects. And then overall, the larger view here is if you look at the combined ICOs that happened over the last year and a half up to now, so far we had about 1,700 that have been concluded. And out of those, the top 20 raised more than 60% of all the capital. So when you start breaking those down, you'll see a lot of prominent names, obviously the Telegrams of the world, EOS, etc. And if you drill down deeper, you will see that those are the projects that actually VCs, big VC names like Benchmark, Sequoia, Kleiner Perkins, actually allocated to.
I noticed that there is an apprehension to ICOs with traditional venture capitalists. And there also seems to be kind of an undiscerning public when it comes to, startups raising funds, basically moving large amounts of money. It seems, for lack of a better term, so like the general public just doesn't care, or they're not aware. So would you say that your role at Sustany is more to bring in these big projects that can change the world, or is it more to educate the world?
So right now we're trying to do two things. So we're trying to educate the entrepreneurs and the businesses that actually should be looking at this particular technology and paradigm. And what I mean by that, it's actually more pertinent, and by it I mean blockchain and tokenization, to existing businesses than it is necessary to projects. So what I mean by that, if you look at your traditional business that might already have a loyalty system of sorts, they should closely look into tokenizing this particular system. Because, I mean, the obvious one, if I am American Airlines, why don't I turn my frequent flyer miles into a token, right? That's an example that has been used a lot, but that also applies to anybody else who has a loyalty system and right now is assigning points. And so in that particular scenario, you're creating a win-win. It's a win for the company. It's a win for those people that accumulated those points that now can actually transfer this into something else. So, and as far as the startups are concerned, there I would just caution and go back to business fundamentals. I mean, build at least a prototype. Don't try to raise money on a white paper. That works only for so long, obviously, because most projects obviously fail, and that's regardless if it's being raised through an ICO, traditional money. And so to the second part of the answers, like our second education part, is educating the existing venture community, because you're right, they're oftentimes misinformed about what this technology overall does, because the whole discussion has been focused on cryptocurrencies and everything refers to this as crypto. It's a little bit like referring to the internet as secure socket layer, right? It's just the part that makes it more secure, but has nothing to do with the overall changing paradigm. So on a daily basis, we talk to venture capitalists, explaining to them the overall paradigm, how it's relevant to for the existing portfolio companies that either should be adapting this or should be looking into projects that are encroaching on their space. And then B, at this moment in time, if you don't have part of your allocation in blockchain-related projects and or cryptocurrencies, it's almost negligent because of the returns that we have been seeing over the past 18 months, right? That we've seen outsized returns, and people always kind of move the p-value there in terms of, hey, if you've gotten in at this moment in time, you've lost money. But if you're an actual venture investor, your focus should be on the long term, right? Your focus should be 2, 3, 5 years down the road. And there seems to be very little doubt that certain types of paradigms will be around. So at this point in time, in order to shut down Bitcoin, you have to shut down the internet, right? And once you turn it back on, it's obviously right back. And to a large degree, that holds true for Ethereum as well. So there's a lot more obviously to say, but the short answer is we're trying to educate both the entrepreneurs as well as the venture community. So at this moment, we're still just managing our own funds. We'll eventually, over the next couple of months, opening up a fund for LPs that they can then co-invest, and we'll keep it pretty conservative based on the space, probably in the VC realm.
Speaking on educating both entrepreneurs and public, like I said, we have a lot of lay people that listen to the show. A lot of people that, I don't want to point any fingers, but probably like to buy Bitcoin and then sell it once it starts to go down because they get scared. So trust, and there's definitely an interest. People are wanting to get into these new markets. How do you approach some of these, let's just say, stubborn folks who are holding on to an old way of doing things, whether that's traditional venture capitalism or banking? What are some of your ideas and tactics, other than just what you said earlier? What are some new angles to approach this change, which is coming? A lot of people just don't want to accept it yet.
Yeah, I mean, a lot of times you can simply use examples that are outside of the US if you're talking to US investors, because a lot of countries outside of the US are way more proactive in adapting this technology. You see Switzerland rolling out 1,000 Bitcoin ATMs. Every railway station will have one. You see Germany acknowledging that this is a proper currency. You see some countries now, like the Marshall Islands, abandoning the US dollar in terms of creating their own cryptocurrencies. And you see just a lot of more proactive approaches all around the world that realize that this is a big opportunity in order to evolve specifically the World Wide Web, which is, for me, what's the most important and exciting paradigm, because now finally we gotten to a point where people realize that those monopoles in the way that we created, that they don't serve us very well, that treat us as the user like products, like in the specific case of Facebook. And this is something I've been pointing out for more than 10 years at this moment in time. I wrote an article that Google has products that they're selling, and the product is you. But now that we have an alternative where we can decentralize this finally becomes part of the discussion. And then overall, the technology is used a lot for good. So you need to point out the fact that, yes, it's not very pertinent if you're in the United States and you have a proper bank account, you have a proper ID, you have credit cards, etc. There's a whole big world out there that doesn't have this. There's almost 1 billion people that don't have identification documents. There is a large movement from the United Nations and lots of other countries to bring those in the modern world. And once you have an identity mechanism that's based on the blockchain and that you manipulate using, let's say, your smartphone, you simply tie your wallet to that and you will never own a credit card. So I think it's very important to take a global view on this and to get out of your own comfort zone and realize, yes, that's an evolving technology that will lead to those nations leapfrogging the United States, and the United States will have to eat the technology debt that we created for years to come if we don't pay attention to these. It's the same paradigm that's always been invoked in terms of sub-Saharan people in sub-Saharan Africa that never had a copper phone line coming to their hut. Now they have smartphones, and so they will never have this infrastructure debt. At the same time, they will also probably never walk into a bank or have to pay a credit card fee. So once you realize that, you also realize that banks should have been something that should have gone the way the post office went when email came around, because smart money is exactly like that. It's the same paradigm. There is, from a technological perspective, no reason that we create this enormous arcane infrastructure and pay for the privilege for a chartered bank to hold our funds into an account, and they get to tell you how much money you can take out. So once you start explaining those similarities, think about this. Like, yes, on every day now, you send more emails than post office mail was sent in the lifetime of humans. And so we could do the same thing with money, and the same thing will happen with money. It's just not going to be driven by the United States. It's going to be driven by those nations that have the practical need. More than 50% of GDP of Kenya is now being moved using virtual currencies. And so I think it's very easy to explain from that perspective. It's like, okay, yes, now it makes sense to me. Why am I still paying for the privilege of having a bank host my money when I can send an email for free? I don't put a postage stamp on an email. So why am I paying for sending my own money?
Yeah, that was very eloquently said. And you have such a good and unique worldview perspective. And speaking of global, I'd like to now bring in our co-host, who's currently in Scotland, Mr. Ian Collins. Hello, Ian.
Hello, Ethan. How are you, sir?
Very good. We're talking with Christian. First, we were talking a little bit about traditional venture capitalism. We're talking about ICOs. Christian, you're the CEO at Sustany, which is solely dealing with cryptocurrency investments and ICOs.
Fabulous. Well, thank you very much for introducing me, and hello, Christian. Hey. And also hello, listeners. Thank you for downloading. And yes, I've been listening in, Christian, and it's interesting what you say about the banks, especially with everybody talking about the new waves of cryptocurrency and what that means for banks. What do you think the future roles of banks are going to be? Because the banks have been established for many, many years, and they're not going to go away without a fight. So what do you think is actually going to happen over the next 5 years in the banking industry?
I strongly believe we're going to see the same thing that happened to the post office. Once in a while, you'll still need a post office, but for the most part, you'll see people using smart money. And so this will reach over into many, many different types of contracts, will reach over in the delivery of services. I mean, the analogy has been used a lot is that of voice over IP, right? So in the past, you needed a copper line for you to make a phone call. And then we had mobile telephony. And then at one point in time, we introduced this particular protocol called voice over IP protocol. And all of a sudden, those phone companies weren't able to charge you by the minute anymore because you had peer-to-peer systems such as Skype that would allow us at this moment in time to talk for free forever across continents, right? So there's simply no reason for us to pick up a phone and pay another entity by the minute anymore. So that's the same thing here. And what's important to notice, I think, is that obviously banks are already adopting smart money at this point in time. I mean, the most prominent example would be Ripple, although there's many, many problems with that particular paradigm. But so that will bring down overall their own cost in the beginning, and that's also what you saw in the telecom space. So there's a lot of analogies to be had, but at the same time, there's simply a lot of countries where they didn't have a valid currency. Again, it's not so much a problem for the developed nations like the United States, Great Britain, and so forth. It's a problem for those countries where they have an inflationary currency and where people immediately move everything into, from their perspective, more stable currency.
I quite agree, and I think that's a major paradigm shift for a lot of people. And I think it's going to take a generation for the banks to disappear and the new generation to come up, and they're used to cryptocurrency. I know that a lot of older people don't even trust banks at the moment, let alone some computer numbers on a screen representing their money. So what is your advice for somebody who's perhaps listening to the podcast and they're thinking about investing in cryptocurrency? Apart from the fact that it's a big risk, what do you normally tell people?
Well, so overall, our focus is not so much on cryptocurrencies. I mean, that's typically the topic that's being addressed, but it's only a side effect, if you will, of blockchain. Yes, it started out with Bitcoin, and Bitcoin's initial paradigm was here, we're creating this new currency. It's going to become the new medium of exchange, and that's all fine. At the moment, most people think of it as kind of virtual gold, which is also fine, and it might evolve back to what its original intent was, or maybe Bitcoin Cash or some other cryptocurrency will take its place. But in terms of investing into the space, I think it's more important to realize the overriding paradigm shift that blockchain offers. Yes, cryptocurrency being a big one, and that's going to have a big impact on the financial industries. But every other paradigm where you have a middleman that you can intermediate using a smart contract, you will see major shifts. And then on a larger level, what I find very interesting and very important is the idea of creating more for-purpose corporations using smart contracts. So we all know at this point in time about the quote-unquote failure of the DAO, but the DAO, the Decentralized Autonomous Organization, overall is actually a very sound concept, because what you can do is you can align the purpose of the delivery of a service or good with the actual receiver of that service or good. So what I mean by that, if you're looking at particular systems right now, they are very incongruent. The most obvious one being Google, and we touched on this earlier. So in Google's case, you as the person using the Google search box, you are not the user from Google's perspective. You are the product that Google is selling to their paying clients, the advertisers. So that makes Google, in essence, a marketing advertising company. So what this does, though, is Google as a company, quote unquote, can never provide you with the best search result, because that's not their overriding concept. They are a for-profit company, a publicly traded for-profit company. So their overriding purpose, regardless of what they're saying, regardless if they claim to be a search engine that say, hey, we want to make content more accessible to the world and more useful, that's actually always subsequent to their actual purpose, which is increasing shareholder value. So coming back to what a decentralized autonomous organization is, so if you're looking at the Bitcoin example, no one owns Bitcoin. Right? There's no corporation behind it that needs to make profit.
Yeah.
You own Bitcoin as such, you become a stakeholder and you become interested in the system. As a miner, you have no interest of actually taking over that system because people would stop using it. Right? So at the moment when we have 34% majority controlling it, it's actually 34% or 33 point whatever, not 51%. That's always the wrong term to use in this particular case, but regardless, it would defeat its own purpose, right? So everybody that takes part in one of these particular ecosystem literally has a stake in that particular system, so their interests are aligned. It always comes back to, if I owned all the money in the world, I wouldn't actually own anything because no one else would have an interest to own that, right? So you would be poor. And so with decentralized autonomous organizations, you can align those interests. You can align interests between operators, shareholders, the recipients of the service, employees. This is something you cannot do with a for-profit organization because it's written into the DNA almost by law. If as a executive at Google, if I wanted to make the search engine better for you, it would be very easy. I just subtract anything that has a commercial intent, take out the advertising, and I deliver you a better search result. So if you do this using an autonomous organization, I can do that. And so if you're using the same paradigm across many different industries, it's going to be very, very hard to compete for profit corporation with a decentralized autonomous organization where the purpose is tightly aligned with the actual service that's being provided.
I quite agree. And I think that there's a lot of education that needs to come around what companies are doing. And at the moment, the focus is on what Facebook have been doing, and especially with people's data, and people are getting more savvy around where their data is being used. And I totally agree that any organization that gives you something for free doesn't necessarily have your best interests at heart. So where does this bring your company in then? What are you offering us to make our lives better?
So we focus on two things. So on the investment side, we have been aligning ourselves with the protocol levels we have been allocated to the initial Ethereum ICO when it was still 31 cents. And we have been allocating to EOS in a large way. We are very tied to all those particular projects that have been around in the early stages. We're running the local blockchain groups, started doing this in early 2015, which now has 1,500 members. So on a constant basis, we're staying in contact with everybody developing a protocol, and then everybody that's developing tightly on top of these protocols on the application level. Like you'll see our friends over at Everpedia doing the airdrop pretty soon here, and if you probably have heard of that. If you haven't had those guys on your podcast, I can make an introduction there. But so the idea being that we do both an education of the entrepreneurs there and the venture community to bring those closer together, bring larger understanding to the space. And that's very much needed in the United States, where the discussion is always oftentimes misguided. And in Europe, as you know, we had more awareness for all those privacy violations. Specifically, I taught privacy law right out of law school and was really shocked when I came over here, what's possible with the credit agencies here. And so now we are at a point in time where we have GDPR in Europe, and it's going to start affect US companies as well. So the world comes closer together in this sense. And I think it's very important that you got people in between that explain this and are capable of explaining this and starting to point out what discussions should be had and what discussions should not be had. I mean, the popular discussion here in the United States is always around the SEC regulating ICOs, and that in itself is always already the wrong sentence to formulate, right? The SEC doesn't get to regulate technology. The SEC regulates the citizens, just like any other government agency. So really what they're doing, they're restricting what US citizens can do. And any other agency, not only the SEC, but that's the discussion that's being had here, is doing the exact same thing. So it's somewhat dishonest even to put it in this particular phrase. And I think there's not enough people that stand up and point this out, because you got a lot of service providers in the space that either trying to make the square peg fit their round hole. Might it be accountants or lawyers, etc., that keep this discussion alive? But the discussion is long over, right? I mean, this particular discussion was over a year ago. What I mean by this, if you don't want to be subject to the SEC regulation as an ICO, you simply set up an offshore entity and you don't sell to your citizens. And if you do an analysis of the 1,800 ICOs that are in the pipeline right now, that's exactly what all of them are doing. So what you're really doing is you're excluding anybody in the United States from partaking in this particular industry and getting more knowledgeable. Instead, you're keeping them in this false loop, having a discussion about something that stopped mattering a year and a half ago. And I assume there's other countries where this is the exact same scenario. So for us, it's very important that on our end, yes, we bring more capital in an easy way, but also actually include the population at large, which is really sad that people here can, as you know, walk into a casino in Las Vegas and plunge $100,000 on red and lose it, but they can't pay $1,000 into participating in EOS. That makes no sense on any level.
Yeah, I quite agree. It sounds like I need to get a job with you and work on educating people out there and making sure that they understand what is happening. And I agree that you can't regulate something from a single country, because that's totally against the ethos of why blockchain and that technology is so useful globally. It does make sense that somebody needs to be in control of it, but you can't be in control of it when you're trying to make it globally available with global protection, and once somebody's in control of it, and nobody's going to use it, because then you've got one entity controlling it. So, yes, I totally agree with that.
Yeah, and the one thing that has been pointed out already is that blockchain is the best governance tool that you could possibly have, right? Every action on the blockchain is immutable. You can audit the code. So blockchain should actually be used for governance on any level. And you see some countries in Europe starting to implement that. So that's what the focus should be on, rather than trying to focus on this one small part of how people raise capital. Because, people gonna do shady things. They do this with US dollars, they do this with virtual currencies. So as it has been pointed out many, many times, if you want to stop drug crimes, get rid of the US dollar altogether in printed form. Makes it really hard to do drug trades.
It does, but there's a very good series on Netflix called Dirty Money.
Yes.
And there's one episode there where a bank from England got stung with another currency and different ways that they do business. So if you're listening to this and you're interested, that series is very good. And It's got a lot of different examples.
Yeah, no, I'm
talking about.
No, I'm very familiar with that. So I'll deal with banks and the KYC and ML procedures on a daily basis. And I know this series. There's a lot of confusion in this particular space. It's very, very hard. And that's one thing that a lot of the projects that we engage with kind of forget. At the end of the day, it's very likely you'll still have to somehow deal in fiat. So you kind of need to start from there. You just kind of need to start building your banking relationships. And as a bank, you'll have very tight anti-money laundering and know your client regulation, more so than in the United States and anywhere else, as you probably know. So here you can't even deposit $10,000 a day without raising a red flag. Makes little sense, but that's the reality. And for larger fund movements, you have to provide typically a source of funds letter. And so the last time we were involved in ICO, we actually had to provide every single KYC documentation of everybody who contributed to that particular project, which was almost 1,000 people. to deposit a few $1 million. So you don't go through those lengths in any other scenario.
Yeah, and that's the other thing which a few people are worried about, and I've been speaking to about when they do their ICO, then they basically are worried about who's actually investing this money and where is that money coming from.
Yeah, but if you look at the larger money movements, you touched on this a little bit earlier. So a lot of times, what the money is coming from on large scale right now is traditional VC. So when you look at the ICOs that happened in the last 18 months, more than 60% of the funds came in for just the top 20 projects. And there you can easily identify who basically contributed those funds. So what we're talking about is the rest of the 40%, which went to another 1,700 projects. And most of those received funds from people that were either minors and or playing with the house's money, because it's actually not very easy to participate in an ICO, right? It's not like our Congress people here said that mom and pop are getting into these games. It's technologists that are into this game. It's hard to take part in an ICO. An ICO almost never accepts fiat currencies. You already need to have Ether, and you need to have a lot of Ether, and you need to actually find a conversion rate if you didn't start out there to take your fiat and turn it into Ether. So in most of the US population's cases, that would be like a Coinbase account. And there it's actually very hard and very limited to do the conversion either way, either from fiat into crypto or from crypto into fiat. So it limits very much what you can do there.
Absolutely. So what can our listeners do to help you out? I know they must be going to your website already, but what can they do? How can they get involved in your side of things?
Best way really is to attend the local meetups and start talking to the technologists. Stop listening to what popular media is reporting. It's almost always wrong, almost always has a hidden agenda. As you know, in the United States, it's not like the consumer has an office on K Street. It's banks and lobbyists that feeding this narrative to popular media that's then being distributed. So if you actually want to understand this technology, talk to the people that are actually building this technology and look at this as any other thing. Like as it has been always pointed back to, this is how the internet evolved. This is very similar. Whereas I take the stance that we actually never built the World Wide Web. We're building the World Wide Web for the first time right now, because what we built in the 90s and over the past decade is the commercial web. And I think the awareness is there by now, like you pointed out with Facebook, etc., that those are monopolies that are selling you and your data. And so once you understand that, you also understand that these systems should be decentralized and you should own your identity, as an example, right? So there's more focus on those people that don't have an identity right now, but there's a huge population out there that had their identity stolen. So for those people, they need to be very aware of, hey, there's new identity solutions. This is one of the more important developments that are being developed right now on blockchain technology. There's a couple of good projects out there that everybody should pay attention to, where you can actually regain your identity. Because if you were part of the Equifax hack, then your identity is available on the dark market for pennies, where anybody in the world can create a credit card in your name because I have your social security number, mother's maiden name, etc. So once you realize that this has real importance to yourself and to your daily life, and that you shouldn't be paying credit card fees and that you should own your identity, I think you're going to start paying more attention to this particular paradigm at all. And so lastly, you can start contributing right now, like with projects like the Everypedia, which makes it much easier to actually contribute content. Other than like Wikipedia is great, but it's still very cumbersome, and only 0.1% of the world's population has ever contributed a word to Wikipedia, whereas Everypedia makes it very easy and incentivizes you to provide content to it. You start realizing, okay, this is how the internet should be. Everybody should be contributing. We should be exchanging content. And people should be rewarded individually for providing that content, rather than having a monopolistic organization filtering the content that you get to see and then kind of entices you to click on advertising.
Yeah, exactly. I think the old adage still holds true. If something looks too good to be true, it usually is, or somebody has to be making some money somewhere. Yeah, and I think that people are waking up to this.
Yeah, right now the saying is typically, if you're not paying for it, you're the product, right? And that needs to stop.
Yeah, I remember somebody telling me once that to Facebook, every user is worth $130 to Facebook.
It's actually 35 cents a quarter.
There we go. There's the real figure. Fantastic. So basically, the advice is go to your local meetup groups.
Yes.
I've been going to one called 1 Million Cups locally, which is very good. It's full of tech people and entrepreneurs, and you get a very, very good indication of not only what people are thinking and what they understand, but also you get an interest into how people are thinking. A lot of people are very receptive towards this new technology, but when I speak to them and say it can revolutionize your business, it can get rid of that middle layer of management, they suddenly, their eyes open and go, I was unaware, tell me more about this. And that seems to be a very exciting area of blockchain, and something which I know a lot of meetup groups have tried to convey to some of the people out there who are interested in cryptocurrency, but now they're becoming more interested in how they can revolutionize their business at the same time.
Yeah, I agree. And I think that's underestimated, that people pay more attention to the startups in this space and not enough attention to the existing businesses that actually should be looking towards this. And I kind of try to break this down into 3 steps, because a lot of times to initially turn to the blockchain doesn't make sense in terms of what a database could do for whatever system you have deployed at this particular moment in time. However, you might be able to benefit from a token system, like the typical thing we mentioned earlier, like you want to tokenize your loyalty system. If you're currently giving out points, why is this not a token at this particular point in time, so that your clients can actually convert this into something else? It's a win-win, right? And the other paradigm is always is there going to be another system, another entity that's going to start encroaching in your particular industry, in your particular field, in your particular area, that is actually going to decentralize what you're doing, truly decentralize it? And so by decentralizing is what people underestimate. It's not the most important part is not necessarily the technology layer, but you decentralize your business model. And by decentralizing your business model, I mean align your business model with the service and your client that you're trying to service. And that's a very tough thing to do. And so we are scrutinizing every white paper that comes into our door. We get about 100 applications a month for either running an ICO, for a business or project, or for investing into one. And 99% of the time, this is not understood and or it's not explained how either the token or the blockchain will make a difference for that particular project. And so there needs to be a lot more education. And the hard part about this is not like limited to one particular paradigm, one particular industry that existed in the past. So what I mean by that is it's not like you can ask your computer engineer to create the system, because he's usually going to lack certain knowledge in business logic, in incentive systems and game theory, etc. So what's happening right now, and we are involved with a couple of universities here in California, is that they're creating finally interdisciplinary studies to where those people can come together and talk. That's really what's needed. I mean, we have been holding these particular fields separate artificially for no good reason. I sort of had the good fortune or misfortune to first be a software developer and then get a law degree instead. And so I understand enough to be dangerous in this space, and I kind of understand this thinking. But a lot of people have just started out as being a computer programmer or just a lawyer. And what occurs to us on a daily basis is really, really hard to tell either one what's important in this new paradigm called blockchain from a legal perspective or from an engineering perspective. It's really hard to bring these two together. So there's more discussion that needs to be needed. Every university at this point in time should have interdisciplinary studies where they bring all of those people together.
Yeah, I know that I think University of Southern California has a blockchain lab, or maybe it's California Irvine.
Yes, that's where we are. Yeah, UCI.
Oh,
yes,
awesome.
We're sponsoring that. And Riverside is building an entire building for that right now. We just spoke there. So we're supporting all the universities in that effort and trying to bring education to that, and trying to bring speakers and capital in.
Do you know of any events in the LA area, or maybe that you speak at, or could recommend if you don't speak at?
Yeah, absolutely. I have one of my team members send you a list, so there's lots.
Great.
Yeah,
but
the one thing to pay attention to is, and that's a question that we always ask, is this a pay-for-play thing, right? Stay away from anything pay-for-play, because there's a lot of those right now. So when speakers get asked to pay for them speaking, that's the wrong approach, in my opinion.
I agree. And back to your other point, organizations put a lot of effort into changing their ERP systems, their core processes, their business processes. It's a 5 to 10 year program. And now is when we should be speaking to organizations about, right, let's plan your next upgrade using the blockchain instead. And that education at the CIO level down is very, very important. So it's important for organizations to think in the right mindset. They don't just have to follow that standard upgrade program and relook at their processes. If they're going to do that anyway, let's look at blockchain technology and let's discuss how that can revamp the business and the processes being used within the business. Excellent. Okay, good stuff. What's your website and how can people get in touch with you, sir?
We're at sustany.co. And you'll find me easily enough either there or obviously on LinkedIn, which is the only social media I use. I tweet a little bit, but not too much. But other than that, I'll typically speak at some event once a month. And I'm always happy to come into any organization or at most students' events and just show up and give an introduction to the space. I've been doing this for the last 2 years, and I don't have to prepare. I can just show up and talk, as you noticed.
Fabulous. Yes, I can gather that you've got a lot of information and you're ready to talk about the information on whatever level you need to talk about, depending on your audience. I get that feeling from having a conversation with you. Quick question, sir. Do you use Instagram?
I only use it to talk to the projects that we are evaluating to allocate to. And other than that, I have someone on my team doing that monitoring. I'm not.
Sorry, I was only asking because that was a conversation last night in the pub in Scotland. What's the value of Instagram for business? So I was just interested in doing that quick poll there. If you are using Instagram for business, then get in touch with us. Tell us how you're using it, what you're using it for. It's just an interesting thought in my head here. So I just thought I'd bring it out just as a sideline to finish off this great podcast recording, and very useful as well. And I look forward to seeing you in an event soon or meeting up with you and discussing this further.
Yeah, let me know when you're SoCal and stop by our office.
Absolutely. I look forward to it. I do need to come over to that side of the country once I've finished my business up here in Scotland. Christian, thank you ever so much. It's been very informative, and please keep in touch with the show. It's certainly an emerging space, and I like your approach. It's excellent. And thank you, people, for downloading the podcast as well. You're keeping us going. So please keep downloading the podcast. Tell your friends, tell the people in the office, and tell the people at the water cooler about the podcast when they mention Bitcoin or any other cryptocurrency or anything, so that we can educate them, so that they don't have to worry about putting their life savings in the right place, and so that they can find out what this actually means for them and their young ones in the future. Thank you.
Right on. Thank you very much, Christian.
Sure thing. Anytime.
Brilliant. Thank you, Christian. Have a good afternoon.
You too, Ian. Talk to you soon.
Thank you, Ethan.
Are you looking for an easy way to buy Bitcoin or Ether on a safe, secure platform? Coinbase is the easiest place to buy and sell digital currencies. Sign up today as a friend of the Blockchain Show, and if you buy or sell $100 of Bitcoin or more, you'll earn $10 of free Bitcoin for yourself and $10 of Bitcoin to support this show. Join now using the link in this episode's show notes at theblockchainshow.com. To learn more, visit theblockchainshow.com.